Okay, let's kick off this explainer by confronting what is honestly a massive paradox. How on earth did a small 2015 nonprofit research lab transform into an $852 billion corporate titan? One that investors are now basically treating as an AI infrastructure utility. Look, if you're trying to understand the macroeconomic landscape of technology today, you simply cannot ignore this transformation. We really need to look past the relentless hype cycle and evaluate this with a rigorous data-driven macro lens. So here is our macro framework for today. We're going to define the intelligence utility, trace the mission to megacap, break down the three-layer engine, examine monetizing metered intelligence, and finally weigh the valuation and macro risks. Let's get right into it. Section 1. The intelligence utility, redefining software. To truly grasp the macro impact here, we have to stop thinking of OpenAI as just a chatbot company. Seriously. Toss that idea out. Instead, analyze them as the operating system for artificial intelligence, touching consumers, developers, enterprises, and autonomous agents all at the exact same time. The crucial takeaway is that they are turning intelligence into a metered utility. Think about this historically for a second. Much like electricity made physical work available right through a wall plug, or how cloud computing made server compute available via an API, OpenAI is making cognitive work available on demand. If useful intelligence becomes a general-purpose input into the global economy, well, they aren't just selling a software license anymore. They are literally selling a new fundamental production input. When you look at their platform stack, it's wild because they're touching all these layers simultaneously. They build the frontier models at the absolute base, distribute them to consumers via ChatGPT, rent out the infrastructure via developer APIs, integrate directly into corporate security with enterprise tools, and now they're building agentic workflows that actually go out and execute tasks. This massive, sweeping ecosystem is exactly why investors are valuing the company so incredibly aggressively. Moving to Section 2, Mission to Megacap, the corporate evolution. This whole evolution is really a story of idealistic dreams crashing head-on into industrial-scale capital requirements. Back in 2015, they started with this pure nonprofit ideal, build AI for humanity, no profit constraints. But by 2017, the staggering reality of frontier compute costs hit hard. Let's face it, you cannot fund supercomputers with philanthropy alone. This forced a massive adaptation, first pivoting into a capped profit entity in 2019 to secure billions from Microsoft, then surviving the explosive growth of ChatGPT and a highly public board crisis in 2023, before finally restructuring into a public benefit corporation in 2025. This resulting structure is completely unprecedented. You've got the nonprofit foundation retaining control at the very top, but underneath, the OpenAI group operates as a for-profit public benefit corporation. It's a hybrid institution, uniquely designed to raise capital just like a major tech giant, securing the hundreds of billions required for data centers and chips, while still attempting to maintain the moral authority of a public interest mission. All right, Section 3, the three-layer engine, the operating model. So beneath the hood, this business basically runs on a three-layer engine. At the base, you've got the infrastructure layer, the data centers, the chips, the compute partnerships. That dictates the ultimate cost of the product. Above that is the model layer, the frontier research and training that creates the raw underlying intelligence. And finally, sitting at the top is the product layer, ChatGPT and the APIs. This perfectly illustrates exactly how OpenAI takes raw compute and research and packages it into a unit of intelligence that people will actually pull out their credit cards for. Now, when we look at that product layer, we really have to split it up. Consumer AI is all about building a daily habit, brand recognition, and tapping into a willingness to pay. But enterprise AI, that's an entirely different beast. The enterprise layer is where OpenAI secures incredibly sticky, mission-critical workflow integration. Companies aren't just buying a cool demo. They demand rigid security, strict compliance, and highly provable return on investment. That is exactly where the deepest economic moats are being built right now. As strategists, the enterprise layer is absolutely where you need to focus your attention. The whole system effectively runs on an operating flywheel. More compute enables vastly better models. Better models attract millions more users and massive enterprises. That usage produces the revenue and the crucial data needed, which in turn funds, you guessed it, more compute. From a macro perspective, the ultimate investor question here is whether this loop produces durable operating leverage, meaning margins actually expand as they scale, or if it's just an endless, exhausting treadmill of capital requirements just to maintain market share. Let's move to Section 4, Monetizing Metered Intelligence, the revenue ramp. Diving into their recent financial disclosures really highlights why some people call this a total money printing machine. OpenAI currently commands over 900 million weekly active users. 900 million! This creates an unprecedented global consumer habit that acts as the ultimate top of funnel for enterprise adoption. I mean, when employees are already using ChatGPT at home, selling it to their IT department on Monday morning becomes infinitely easier. Out of that massive user base, they've managed to convert over 50 million paying subscribers. This metric is absolutely vital because it proves a widespread, massive willingness for everyday people to pay for premium model capabilities straight out of pocket. Which leads us to this staggering result, roughly $24 billion in annualized revenue. They hit a $2 billion per month run rate less than 4 years after ChatGPT's launch. In the entire history of software, this scale of revenue compression is essentially unheard of. It is truly phenomenal growth. To hit those kinds of numbers, you need multiple monetization engines firing at once. You've got the consumer subscriptions, enterprise seats, and developer APIs processing over 15 billion tokens every single minute. But the real future economic leaps, they lie in the final engines, moving into search intent, directly taking on Google, and developing labor-substituting agents. Think about it. If an AI agent can reliably replace 10 hours of human labor a month, the pricing power completely shifts from a standard software subscription to actual labor replacement value. Finally, Section 5, Valuation and Macro Risks, Pricing the Machine. With the $122 billion of committed capital sitting at an $852 billion valuation, how exactly does Wall Street justify that multiple? Well, a disciplined sum-of-the-parts analysis reveals OpenAI isn't just one simple business. It's a bundle of massive call options on the future of the economy. You have to value the consumer piece like a global search platform, the enterprise piece like a SaaS productivity tool, the API platform like AWS cloud infrastructure. And those coding agents? You have to value them through the lens of pure global labor substitution. But, and this is a massive but, we have to carefully distinguish between explosive top-line revenue growth and actual profit. The revenue printing is obvious, $24 billion top line. But the profit printing? That is threatened by the brutal, incredibly capital-intensive reality of paying for inference compute. Serving one more software user simply is not free when the product requires massive, continuous data center processing. Which brings us to the ultimate macro question. Can they lower the cost per unit of intelligence faster than usage expands? If unit costs fall through better chips and relentless optimization, it's an unstoppable profit machine. But if usage outpaces efficiency, it's just a capital treadmill where they have to keep raising billions just to stand still. Because there are some very real macro risks keeping institutional investors awake at night. Compute costs are massive, yes, but there's also the creeping risk of model commoditization. What if the open source models become good enough? Then you have the deep dependence on Microsoft for distribution and compute power, throwing the serious liability of hallucinations in high-stakes corporate workflows and sudden regulatory hurdles. Honestly, any of these could force OpenAI into becoming a low-margin infrastructure vendor rather than the high-margin ecosystem monopoly they want to be. So, to wrap up this entire explanation with a quote that really hits the nail on the head, OpenAI is essentially a revenue-printing machine trying to become a profit-printing platform. They have definitively built the revenue engine. The sheer demand is undeniably there. But the transition to a durable, cash-flowing platform is still ongoing and fraught with massive infrastructural challenges. I'm going to leave you with this final, provocative thought to chew on regarding the intrinsic value of the most important corporate transformation of our decade. Can they maintain their grip on the unit economics of intelligence as the entire world races to catch up? Think about how that plays out for your own workflows and, honestly, your own investment theses. Thanks for diving deep into the macro layer with me today.